Nightly Business Report. Produced in association with Reuters, the world's largest electronic publisher. Made possible by Digital Equipment Corporation, with its new generation of VAX family computers, connecting headquarters, branch offices, production and research centers into a single integrated computing environment. Digital has it now. By Kidder Peabody, for over 120 years, one of the world's leading investment firms, serving the financial needs of individuals, corporations, and governments. Kidder Peabody. By A.G. Edwards, members of the New York Stock Exchange, serving individuals and businesses through more than 340 locations nationwide. A.G. Edwards, investments since 1887. And by contributors to public television.
Good evening, everyone. The government today reported that fewer Americans were out of work and looking for jobs last month than at any time in 14 years, as the unemployment rate dipped to 5.4%. That's 0.2% lower than the March figure and marks the third straight monthly drop. But as Washington correspondent Bob Friedman reports, while some are hailing the unemployment report as good news, others are concerned it may only increase inflationary pressures.
An increase in manufacturing brought on by the continued surge in exports helped lower the unemployment rate to 5.2% in April. As a result, the Labor Department says there was a hike in employment among adult men.
I think that's because of both an increase in the manufacturing sector, particularly export-led, and the increase in oil, gas, and mining, which is very positive. First time we've seen that.
President Reagan added today that the jobless rate is yet another sign of the economy's good health.
Today's report, coupled with those of the last 2 weeks, shows that the economy continues to grow at a moderate pace and inflation is under control.
But some economists say the April unemployment rate hints that inflation may not be in control. Already, they say, the continued creation of new jobs is nudging up wages in some industries and regions of the country.
We get frequent reports from individual companies where they indicate they've got to pay higher wages in order to fill slots where they're finding shortages.
Those labor shortages, say analysts, will fuel inflation and will put pressure on the Federal Reserve Board to tighten credit.
I think the Fed has to be very careful and not jump at 1 month's figures, but they have to be bothered by this. I would expect to see a gradual snugging the rest of this quarter and then probably a 0.5 percentage point discount rate hike sometime this summer.
The Federal Reserve Board's Open Market Committee will meet in 2 weeks, so analysts do not expect the Fed to take any action before then. With the government and some private economists predicting further declines in the jobless rate, the Fed is expected to feel growing pressure from inflation, which it says is public enemy number one. In Washington, Bob Friedman for the Nightly Business Report.
The prospect of higher inflation and interest rates led to lower stock prices as the Dow closed with a loss of nearly 13 points. With the details, here's Paul.
Wall Street's first reaction to the April unemployment report was positive, mainly because the 174,000 rise in non-farm jobs was about 100,000 below what would have been considered an increase with serious inflationary implications. As a result, the Dow Industrial Average bounced back from yesterday's 16-point loss with almost an 8.5-point gain at 11 a.m. Advancing issues took a 5-3 lead over losers. With traders again disappointed by the lackluster volume on this latest rally, prices began to fade during the mid-session hours, especially because the bond market was lower in reaction to the April jobless figures, while oil prices rose considerably. By 2 p.m., the Dow fell to a deficit of 3.5 points, and losing stocks overtook gainers by a 4-3 margin. Stocks continued to trudge into lower ground at a snail's pace out of sheer neglect more than anything else in mid-afternoon. By 3 o'clock, the Dow was off almost 6 2/3 points. With the April job report now history, Wall Street in the final hour began worrying about next week's report on producer prices and the following week's trade deficit report. As a result, prices slumped badly and the Dow Industrial Average fell to a closing loss of 12.77 at 2,007.46. For the week overall, the Dow was off 24.87. Theoretical high of the day just above 2038, the low down around 1998, just a touch below it. Trading volume way down to 129.1 million shares, the third slowest day of the year. Down volume exceeded up volume by a considerable margin. The Dow transports off nearly 6 points. The utilities bucked the overall trend with a small gain of 0.18. Dow 65 off just over 4 points. The closing tick a minus 256, indicating that sell-off in progress. Standard & Poor's 500 off 1.31, the 400 off 1.65, and the 100 fell 1.42. The Commodity Research Bureau May index was up 0.1 point. New York Stock Exchange index fell 0.63, Value Line off 0.42, and the Wilshire 5000 fell about 10 1/3 points. The bond market opened only slightly lower as many traders felt the April jobless report wasn't all that inflationary. But sellers became more aggressive after more closely analyzing the report and noting the upward revision in new jobs in March, along with higher than expected wage increases in April, all of which renewed the fear of inflation and a tougher credit policy by the Fed. 1.25-point losses were commonplace among the corporates and tax-frees. Governments fared about the same. 12/32 loss in the long treasuries of 2017. Shearson Lehman Long Treasury Bond Index off 5.84, and Fed funds at 6 7/8%, bumping right up 7% at the end of the day. I'll be back shortly to show you where the action was on Wall Street today.
On the precious metals markets today, gold was down $1.70, but platinum moved in the other direction, closing up $5.40 an ounce. The dollar closed mostly lower on the New York currency markets after trading in a narrow range as the April unemployment figures failed to spur much activity. The pound was up slightly against the greenback. And oil prices continued to rebound in New York and London.
Eastern Airlines and its parent company Texas Air today counterattacked in the struggle between the airline and its unions, filing a $1.5 billion lawsuit against the Airline Pilots Association and the International Association of Machinists. The complaint charges the two unions and their local leaders with engaging in an illegal scheme to smear the company's reputation to enable them to buy the airline at a bargain price. Specifically, the suit accuses the unions of conducting an illegal work slowdown and sick-out, intimidating Eastern's bankers and other lenders, and attempting to undermine the morale of Eastern employees. Complaints by the unions helped to bring about an unprecedented probe of Eastern and Texas Air by federal authorities. And union officials today claimed that the lawsuit was intended to divert attention from attempts to expand the investigation.
Yesterday, the Congress in committee voted out Resolution 262, which calls for full investigation of TAC as to whether or not it's a fit, willing carrier. And I look at this suit as something that they've been programming for some period of time, but they're using it to try to divert attention away from the fact that the Congress has said they want to open this question up and take a real look at Texas Air.
For Frank Lorenzo to point the finger at the unions is certainly a typical gesture on his part to blame everyone for his problems. Congress's fault, the union's fault. I guess it's his passengers' fault, too, because they consistently, for months after month after month, have enough complaints to put him at the very bottom of the list of every airline in the country.
April figures for both Eastern and Continental Airlines do show a fall-off in passenger traffic, with both airlines filling about 6% fewer seats on their planes than in the same month last year. However, Eastern contends that when it comes to safety practices, the unions have been twisting the facts. It claims that since its takeover by Texas Air, it has dramatically increased its maintenance spending. Dean?
Shearson Lehman's recent acquisition of E.F. Hutton is about to become a bit more expensive. The firm says it intends to plead guilty to criminal charges that employees of Hutton's office in Providence, Rhode Island, took part in a money laundering scheme from 1982 through 84. Federal prosecutors say at least $500,000, some of it from organized crime figures, was laundered through the Providence office during that 3-year period. Shearson Lehman Hutton faces up to $1 million in fines and is expected to plead guilty to the charges later this month.
In India, Union Carbide today accused the judge hearing the Bhopal disaster case of bias and urged him to disqualify himself. The judge had ordered the company to pay $270 million in interim relief to victims of the 1984 disaster while the case proceeded, a ruling which Union Carbide claims amounted to assessing liability before a trial. A higher court upheld the ruling last month, but lowered the amount of interim relief to $192 million.
Union Carbide stock today closed at 23 3/8, and that was up 1/2 point. The Dow Jones Industrial Average in review certainly did move higher, off 12.77 today, and for the week off nearly 25 points. 578 issues moved higher, 838 lower on the big board, 19 new highs for the year, 22 new lows. Topping the active list on